To work out whether Israel's declaration of war on Hamas has longer-term consequences for the global economy, which, with rapidly rising bond yields in the past few weeks, are already displaying fragility, you have to start with oil and its price and its supply. So let's bring in here Marcel Tillion, Capital Economics Head of Asia Pacific, and Vivek Dhar, Director of Energy Research at the Commonwealth Bank. And Marcel, can I just start with you? I did mention their bond yields because the risk of recession is seen to be rising already. So do these attacks potentially increase that risk?
At the margin, probably yes, but not much. I mean, Israel is not a major economy. It's the 29th largest economy in the world. The biggest risk is, as you mentioned, that this conflict results in any disruption to oil supply. When Hamas yesterday admitted that Iran helped it stage the attacks. There's recently been a bit of a rebound in Iran's crude oil exports. So if the US and its allies were to reinforce the sanctions that are already in place, and that rebound in exports would reverse, that could push up the oil price. There will also probably be a higher risk premium on oil over the coming months. And that in turn would increase energy prices, which has two consequences. I mean, first of all, it takes away consumption power, so spending power from households across advanced economies. And at the margin, it also increases the chances that central banks will keep interest rates high for longer or even raise them further. This will partly depend on the extent to which these high energy prices feed through into core inflation. At the moment, with demand in many advanced economies generally weak, we don't think there will be major second-round effects on underlying inflation, but it's certainly a risk that central banks may not be willing to tolerate at the current stage.
Okay, so Vivek, if I can bring you in here, Israel, of course, broadly has no oil to speak of. It has an emerging LNG sort of, if you like, industry. But Iran, which is said to have aided Hamas, as Marcel points out there, it has a lot of oil. Why is that? Why the oil prices spiked broadly? Is it all about Iran?
Look, in terms of our view right now, it certainly looks like it's how much does this blow back on Iran? And I think that will really come into the equation when we talk about this oil price premium. And I think that Wall Street Journal article that really put out there that Hamas and Hezbollah have implicated Iran in terms of planning this attack on Israel. I think that really does mean that if US turns its attention to Iran and blames them for this officially, we could really start seeing any of that reprieve in Iran's oil exports reverse. And that is where we could see this deficit in the fourth quarter really start turning south. Like already before all of this happened, OPEC themselves were talking about a 3% of global supply deficit in the fourth quarter, like north of that. And if we add on top of that 0.5 to 1% of global supply sidelined, we are really talking about physical markets tightening to the extent that oil prices could threaten meaningfully that $100 a barrel level. And that's really what we're talking about when we think about the implications, is how quickly does this turn into Iran being isolated? And that is where all the concern right now with oil prices are heading.
Okay, so I'll go back to Marcel because I want to know also the outlook for the global economy and therefore the oil price. Surely it must get worse the longer that this conflict drags on.
I guess how long the conflict drags on doesn't really matter. I guess the key question is what the response is by the US and its allies. If they clamp down now and that restrains Iran's oil output, that will be a one-off hit to Iran's exports and to the oil price. I guess apart from that, if there's no major response, then I guess any near-term rise in oil prices would probably not have major consequences for the outlook of the next couple of years. So I think what really matters is how this all evolves for the next few weeks. I don't think it has any major medium to longer term consequences for the global economy.
Okay, and what about the prospect of other countries coming in to somehow support Hamas? That's clearly something that behind the scenes right now, diplomats will be working vigorously to make certain that Hamas is perhaps isolated along with Iran, that it doesn't go broader into other Arab states.
Yes, that's right. It needs to be made sure that other countries don't get dragged into this. If there were sanctions levied on other countries apart from Iran, that could certainly have major implications for global oil supply and global oil prices, and that would certainly change the equation.
Okay, so Vivek, last week Russia and Saudi Arabia agreed to continue cuts to oil supply. So does the Israel-Hamas situation now have the potential to change the supply side equation?
So in our view, it is going to be very challenging for that supply agreement, or what Russia and Saudi have agreed to for the remainder of this year, to actually become much harder. Like, the way that we're looking at it, particularly the situation that Saudi Arabia is caught in, is that it will be a struggle for them to lift supply, alleviate the pressure on the world, and even have the optics of cozying up to US and Israel while we are seeing Gaza bombarded. And it is for that reason, the optics of all this, and the fact that this is an Arab Brotherhood that we're seeing, that Saudi Arabia is almost stuck in this position of now keeping their cuts intact for the remainder of this year. But even more broadly than that, any kind of progress on an improved relationship between Israel and Saudi Arabia looks to be far more tenuous now than it was a few weeks ago. And I think that has been the major casualty, and probably one of the key motives of Iran in all this, is almost pushing back that relationship between Saudi Arabia and Israel from developing in the first place. And I think that's really where this supply side dynamics is going to be a very low probability of Saudi trying to save the day, and the risk of Iraq's oil exports falling rising. And that, both in conjunction, is what really leads into that shortage view in coming weeks.
Well, Tara, it's going to be fascinating. We'll certainly keep across all of this. So to you, Vivek Dhar from the Commonwealth Bank, and Marcel Tillion from Capital Economics based in Singapore, both of you, many thanks for your time today.